Good morning, good afternoon, good evening, depending where you are on the planet. And welcome to the Bull versus Bear webinar. Steve Miley on the call for trade day on Tuesday, the 24th of January. Welcome, everyone. Go for our usual regular run through in here today. Calendar, what we've had, what we've got coming up, macroeconomic fundamental events, what's going on, what are the major news wires telling us. Take a look at the charts. Where are the trigger points on the major asset classes that we're trading going into today? Right. First of all, ongoing Asia quiet holidays, China, South Korea, New Year lunar holiday going through. So this week, so Asian market's been relatively quiet. We do have today's focus on the PMI data from global S&P Global. So we have that have been coming out of Europe through Asia this morning and coming out through Europe through the day today. Mixed through Europe, as you can see in here, sea of red and green. So we've had the French data hit and a miss, German hit and a miss, Eurozone as a whole hits overall, UK hits and misses. Okay, so a real mixed bag in here. Generally, markets taking it relatively well, though. If we jump to the European stock markets in here so far this morning, we're seeing a slight dip. I mean, a very slight dip. European stock, the CAC's pretty much unchanged. Slight dip in the FTSE and the DAX so far this morning. So modest moves there, but the UK data was a little bit disappointing in there. So looking ahead to this afternoon, we do get actually Christine Lagarde, the president of the ECB, is speaking later today. Actually, now I think, or maybe we've missed that actually. Where are we? No, coming up later today. No, I think she may have already spoken. I'll have to double check on that one. Yeah, we the in here we're seeing, she spoke yesterday anyway, so it's not going to really have a significant impact on markets. Moving forward, going into this afternoon, we get the US S&P Global data. So manufacturing, composite, and services in here. Remember, this is the flash PMI. So this is the heads up. This is the preliminary data that we get ahead of the final data, which we get at the beginning of the month. That comes out from next Wednesday. I think it's the 1st of February, and then we get the ISM data then as well. That's when we get the ISM data. This is the preliminary flash data we get from S&P Global. So no ISM data today. So that comes out 9:45 Eastern time today. So watching out for that. Yeah, Lagarde's already spoken. Sorry, yeah, that's already happened. That's going to be the main focus today. We also get the weekly API crude oil inventories if you're trading oil. Watching out for that. That's at 16:30 this afternoon Eastern time. So nothing massive, but I mean certainly the S&P Global number is what we're going to be focusing on. If we go to the earnings calendar in here, so we have Microsoft. We've already had a host of data come out this morning, kind of mixed in here as well. Johnson & Johnson was the big one, really. We had a slight miss. It's only very, very, very slight miss, though, on revenue. Beat on the earnings per share, however. Danaher and Verizon in here, pretty much in the green. After the bell are the more important ones we're looking at today. Microsoft, obviously a real biggie. So we're watching out for that after the bell. We've closed today, after the cash markets closed, that is, and then we get Texas Instruments as well. That's often seen as a bellwether for the semiconductor industry and the IT and generally the tech industry. So we're certainly watching that as well. Texas Instruments, but primarily Microsoft on the earnings side today. So let's take a look at 5 things. Let's start today. You need to start today. So, investing in US stocks and junk bonds are failing to price in enough risk of recession, according to an Asia-focused hedge fund. Yeah, I mean, nothing really significant there. US confronts China about potential assistance for Russia in here, not really impacting markets at the moment. US Justice Department is poised to sue Alphabet, Google over dominance in digital marketing. Markets slightly lower in here this morning, and we've already gone through what we've got coming up going into today. Okay, let's take a look at some of the articles from major news wires. So stocks wavering. Strong day yesterday, obviously. So you've got an article from Reuters. Wall Street extends rally powered by tech bounce. So tech continuing to push higher over the last 24 hours, leading the broader market higher. But overnight in here on the futures, we're just a little bit sideways. Microsoft, Intel earnings. Oh, did I miss Intel? Maybe I did miss Intel. I didn't see that on there. Was Intel further down? I didn't see Intel on there. What Intel's later in the week? I don't see Intel. Does anyone see Intel there? No. For some reason, I thought Intel was coming. But yeah, I'd say they've got it down here. Maybe that's wrong. But okay, they're saying Intel as well, earnings, but I'm not so sure on that one. Stocks kind of a little changed really though overnight. We had a big run up, obviously, yesterday. Oil in here, steady. Traders look to China to delivery demand boost. Volumes may be light in Asia during Lunar New Year, however. We've already covered that, really. Euro area business activity shows bloc may dodge recession. So the composite, so this was the PMI data was still peaking out. First time over 50 since last June. So that's a possible. S&P Global says region isn't by no means out of the woods yet. But, we were kind of pretty sure that UK Europe was going to go into recession through the second half of last year. Pretty much nailed on. Even the politicians were saying, good chance we're going to go into recession. And you know what? It looks like we might dodge it in UK and Europe. Not necessarily, but certainly looks like a fairly soft landing. Even if we go into the recession in UK and Europe at the moment. For everything we have in front of us, obviously we don't know what's going to happen in Ukraine, Russia, Ukraine, right? But that being said, that being put aside at the moment, considering nothing escalates to any worse conditions than we are at the moment, we could see, maybe a very mild recession in UK, Europe, and we were looking almost nailed on for at least a recession and maybe a harder recession. So the chances of a hard recession now are really waning in Europe and certainly to a greater extent in the US as well. So it'd be a miraculous feat. It'd be job well done by the Fed and by global central banks if they manage to start to calm inflation down whilst avoiding a global recession in various economies. So certainly the data though looking at that. However, in the UK in here. UK recession risks grow with record deficit and output sums. So tax increases, inflation are draining consumers' pockets, and that PMI data are not so good for the UK that we had in here this morning. On the back of that, we've seen sterling drops. PMI survey points to a recession. So sterling, the pound's lower, and the FTSE also dipping lower as we already looked at. FTSE dips after weak data, highlighting the risk of recession. So UK certainly not out of the woods yet. But Europe looking a little bit more resistant. OPEC Plus delegates expect February panel to recommend steady output. Ministers will meet online next week. So that's something to look forward to regarding oil. Looking for that to stay the same. Just a quick note on crypto. I've been highlighting this the last few days in here. Crypto markets continuing to push higher, continue to remain resilient, have had really strong gains in the last 2 weeks, surging higher and expecting that to just really be a reflection of the general, broader, wider risk-on theme that we've got going on in markets. Stocks stay resilient. Another strong day for stocks yesterday. The dollar stays weak. And gold stays strong, pretty much on the back of, even though we're in risk on, and obviously gold is a safe haven asset, it's rallying with the fact that the dollar is weak. So weak dollar equals strong gold, as opposed to it being because we're in risk on. So gold price is much higher on slower Fed rate hike bets. So there's certainly been a tone, certainly over the last, we looked at this yesterday, the tone from Fed speakers from last week in here pointing to, look, we've now got nailed on in here pretty much a 25 basis point hike, hardly any chance of a 50 basis point hike at the next meeting. When we ran through all this yesterday, but markets now pricing in 225s at the next two meetings, February and March, and then hold through to November, and then 2 rate cuts then at the back end of the in year, November, December, to bring rates back to where they are. That's where the chances are, coming back to where they are right now. 50 up, 50 down in the first quarter up, and in the last quarter back down, and on hold through Q2, Q3. What else do I have for you in here? Crypto, gold, dollar struggles, shares buoyant. We've already sort of talked about that theme. And if we look into today, as I say in here, we're slightly lower with the on the European exchanges, although the CAC in here unchanged. And if we go and look at US in here, slightly lower after strong gains yesterday of around 1 to 1.5% across the Dow, S&P, and Nasdaq. We're dipped about a quarter, 4/10 lower on the Nasdaq in here this morning. Okay, let's take a look at the charts. So really strong gains in here. This is the S&P 500. Eclipsed last week's peaks yesterday. If you look at the sell-off that we saw in the second half of December in here, we're now up to and through. We're kind of hesitant last week here at the 61.8% retracement of that sell-off. We got up to and through there yesterday. Obviously, a little bit of a dip in here this morning. I think the strength we've seen the last 2 days in here, we may consolidate that and going into today. But risk for me still skewed to the upside. I cannot, the underlying theme from October is up. We've neutralized the sell-off from December. The theme from the beginning of January is up. And last week's correction has been reversed in here. So all of that still points to market high. If we go to 15-minute chart, yes, we've had a dip. I think just whilst holding below this little dip in here, this dip lower here. So that is minimally whilst above there, 40.1675 and staying positive. Really it needs to get back down through here. But, that's quite a ways away. Okay, that's down through yesterday's lows. But, whilst above this swing from overnight, 1675, hanging on to a bullish theme. On the upside, where I'm going to look at is I'm going to look at this kind of counter trend line that we have running across here. Okay, off these peaks, you see it's just running down through there. If we break back up there, there's your early trigger in, and you can put there a fairly tight stop either below the current lows or the low over here at 1675. So looking for the break back above this little counter trend line. Similar story on the Nasdaq. Not just eclipsing the peak in here from last week, but surging through that peak. And if you look at the sell-off in here from December in here, there's the 61.8. I mean, absolutely smashed through that yesterday. And if I go and add in here on this retracement, I'm going to add in the 78.6 as well. 78.6. Oh, that didn't work so well. Oops. Oh, I don't know what went on there. Oh, sorry, guys. 1 second. And all sorts of things flash up on my screen there. 78.6. Okay. So yeah, and you can see we're getting right close to 78.6% retracement. I wouldn't be surprised if we put the 76.4 on as well. If I go and put that on as well, 76.4. If we're not bang on that, 76.4. Yeah, so look, we went right up. We sort of paused in between the 76.4 and 78.6. Remember, these are both Fibonacci numbers, okay? 76.4 and 78.6. People use different ones. I tend to use a 78.6. It's just a bigger number. It's a higher number. It gives you more confirmation. That's the analyst in me. But, we kind of paused right in the gap between the 76.4 and the 78.6 and have faltered back from there. But if we go into the 15-minute chart, there's the surge from yesterday. We're holding above the overnight low. We have had this track back lower. Same thing in here. Yeah, I'd be looking for, if it breaks below the overnight low, yes, we could consolidate back lower. Looking for a break back above this counter trend line. Back down through the overnight low. 861 and a quarter, 11, 861 and a quarter would open up a correction back lower. Probably only looking down towards this kind of area here. You see where there are two impulsive moves. One's here, kind of paused, and second impulsive move yesterday. So down to like the 11,800 kind of area, looking for that to hold. Going back to the S&P, similar story there. Looking back for this area here, so just below the lows actually for the S&P, the overnight low, looking for that area there to hold. Probably around 4,005 on the S&P. Okay, let's take a look at the commodity markets and then also the bonds. Starting off with gold on the daily, another new high, prodding higher. Can only be bullish in here. It's been very grindy. It's not been an easy play, and yesterday obviously dip and a rebound. But I would go to the 15 minutes in here. There's the dip and the rebound in here. Strong recovery effort, staying bullish. Whilst above, kind of, I'd say 1935 staying bullish, really buying a breakthrough 1941 for gold. Let's take a look at oil. Remember, oil now, you're on the March contract. Don't forget that. So I'm just going to get rid of these. I've got the same tab open twice. So on the daily on oil, dip and a rebound this morning, a rally and a failure right from the peak there. The previous peak from last week fell down from there. So a negative candle yesterday, potentially, but rejected already this morning by the dip and the rebound. So you have failure candlestick yesterday. So showing some indecision, but nevertheless, underlying theme has to be bullish in here. You can see you've got this old impulse peak in here as well. So you got the peak up here, 82.71. The peak here is 82.66, and the peak there, 82.64. So clearly that's an important resistance up through there, and then quickly takes us to this next one, and then can open up further upside. And the dip and the rebound, I think, is important. This is important this morning. So there's the failure. There's the old peak last week. There's the failure, the rally, and the failure yesterday, and then spike lower and rebounding here this morning. So you see very impulsive move lower. I'm not sure if that was on that news, and then look up through the resistance there, pushing higher now. I mean, I would just be pulling the trigger on this one there. If you want to wait through the highs, you can do that, but I think this is a buy opportunity right here, right now on oil. And if we go take a look at the bonds in here, going to stay with the 10-year. So where is the 10-year ZB? First of all, let me go to the daily chart first of all. So daily chart in here, you see it's been grinding lower, so looking slightly more negative on bonds in here, and it's certainly risk in here of taking out the trend line support. Comes up through here. It's flirting with that trend line. I mean, I think you give it the benefit of the doubt while it's holding that trend line, but it's very tenuously holding that trend line support. So a little worried about that in here. Actually, you need to redraw that. It needs to go up through there. Yeah, it's kind of it's down through the trend line support. So that's a little bit of a worry. I think whilst holding the low from that impulsive bar that we had from the 18th, so end of last week, was that Friday? And on Thursday, the impulsive move from Thursday, the low on Thursday was 114.16, and the yesterday's low was 114.19. So whilst holding 114.16, tentatively remaining positive on here, and then what I'm going to do is I'm going to add in the 15-minute on this as well. So I'll just change this to 15, and so look at the intraday. So there's the swing down to, there's the low from yesterday, holding above that previous low. So it's kind of, you have to say, it looks fairly negative there. It needs to get really above, I wouldn't want to pull the trigger on the long until above these little peaks here. So you got the peaks here at 114.31 and 114.31 and a half. So really a 115 handle. You stick a 115 handle on this, I'm happy to be bullish, because if you look at the downtrend line that we have, we've already reversed the downtrend line. So it's trying to form a base in here, and it's holding. If I go back to the, just going to move this along, put it on the on here, resize this again. So if you go back to the daily, remember it's holding this support. So yes, it's flirting with this uptrend line. You're going to have to really not drawing that very well. I'm going to redraw. You know what I'm going to do? I'm going to draw this properly, rather than trying to freehand draw it. I'm going to actually draw it through the lows, through the low there, and then I'll extend it out. So you're supposed to do it. Okay, you see you are flirting. So when I've drawn it properly there, you can see it's flirting with that uptrend line, trying to hold down. It's holding that impulsive low. As I say, that impulsive low there, 114.16. It's held that. And as I say, going back to the 15-minute chart, in here, it's trying to form a base here off of that support. It's reversed a downtrend line. And so for me, if it puts a 115 handle on this, I think this looks more bullish. Takes out support down at 114.22, certainly down through that 114.16 level. It all looks a lot more negative. All right, guys, I'm going to wrap it up there. Any questions? If there's no questions, please put them in. Put hello or put something in the chat quickly if you want to ask a question. If not, I'm going to wrap it up there. Going to wish you all a great trading day. Take care, stay safe, and I'll be back with you on Wednesday for another Bull versus Bear webinar. Bye.